Hello, my name is Tree Demon, and I'm the Devil's Stockbroker. Thank you so much for tuning in to watch this video. Before we begin, please understand I'm not a financial advisor, and none of the following content is financial advice. The following content is for educational and entertainment purposes only. Trading stock carries inherent risk, and you should always respect and understand your own personal risks when considering any investment. Please don't take what I say as gospel, and please do not trade based on the information that I receive and share through my content. Thank you so much, and have a hell of a time in the stock market. Okay, I've got the recording going. So, how's everybody doing?
Hey,
Doing good.
Good,
How's you?
Sandy. Worky.
Let me go ahead and make sure I got the audio boosted so that everybody can be heard.
are you gonna be screen sharing?
I may be doing that, yes.
Cool.
We'll see what works. Okay. Okay. Well, now TradingView doesn't want to show up, so... TradingView always does this to me. It never wants to show up. Ah, there we go. Okay. So now I can share my screen with you guys. So I guess one of the first tickers to look at would be Progenity. But I got a lot more to actually talk about because there's... What was that?
That sounded like a...
Somebody slurping like one of those giant icy cups.
It sounded like a brain freeze.
All right. So we'll take a look at Progenity first. This is the big one. So one of the big patterns that I'm looking at right now for Progenity is this giant Wyckoff, or at least what I'm speculating will become a Wyckoff. The idea is that if Progenity has been following a Wyckoff pattern, then it would have started early on during its IPO phase, and we've already hit the lowest lows that I think that Progenity will ever see in its trading. So then the speculation is that have we just bounced off of the spring, and if so, then we should be seeing new highs like around $4, and then a retest and another move upward from there. So if you're in a position with Progenity for the long term, like shares and leaps, then you should be feeling very confident. But I'm interested to know what everybody else is thinking and what your concerns are, or if there's any data that you wanted to hear from me.
The only question I had, TD, was actually on the results being announced tomorrow. And I remember you said in one call before that you're surprised that they haven't released the data for Precludia yet. Are you still concerned that they didn't actually release the data yet, or are you anticipating they're just holding it for the actual announcement of the results?
I think that they're just holding it for the announcement. Personally, that's pretty much what I'm thinking.
And on the negative side, in case the results aren't as great and if they don't end up releasing data for whatever reason tomorrow, do you think that we will hold that support that we have, the support line? We won't go below that, right? It's unlikely. Is that your opinion?
It seems unlikely to me because they still have patents coming out for it. I think that the product has been proven viable. There wouldn't be patents already out on it if it wasn't a viable product.
Right.
Whether the data is good enough to be used in a clinical setting is that's up for debate, and I'm going to assume that the FDA will have something to say about that. But ultimately, this is one of those situations where it's actually not up to the FDA. It's just a matter of whether the test is proven in a clinical stage. And if so, then the patents and the clinical trial data is what's going to demonstrate how accurate these tests are. If they are accurate at all, if they are even if they can detect anything, then they're still a viable product that can be improved upon. The only thing that we are waiting on is just to find out if it's good enough now that somebody will order the tests and start using them regularly, like say a hospital system like NHS or something like that.
Right.
Right. Yeah. Thanks.
Absolutely.
I guess now it's just a wait and watch till tomorrow because tomorrow is such a big day. I guess it'll be a good ticker to revisit maybe on Tuesday morning once all the dust settles after the results.
Yeah. I'm thinking that it's an evening earnings call if I remember correctly. So
Yeah.
if we get the results that we've been looking for, what we've been waiting for from the clinical trial data, then I'm thinking that we'll see a move because the product that Progenity has created is still the forerunner to its field, and it's a $3 billion market that's not been touched yet. So
Yeah. Yep. Sounds good. Thanks. Thanks, GD.
yeah, absolutely. On a more short-term basis, if we drop down and do a little bit of TA here, maybe we'll see. I think I need to do the 1 hour chart. So the resistance that we're currently trying to beat is 180, and then $2 is another obvious resistance. But above that, all the way up to 250. So if we can even get any of those 250 strikes to start looking like they're going to go in the money, then that would be excellent for Progenity at this point. Because there is actually quite a gamma ramp going on for it. I'll throw some stuff on ScourgeBot spam. So here's here's that gamma ramp. It's not a huge one. 6% float in the money would be excellent, but it's not quite like HYMC or BBIG where you got like 20% of the float going in the money if it goes up just one strike. But it's still big enough to get excited about. If Progenity starts seeing the 250s challenging for in the money by April 14th, those quarterlies, or I'm sorry, the monthlies are a. Oh no, it is a quarterly. I forgot. Anyway, it would be that would be a significant month to see Progenity start breaking out to new highs. So I'm actually feeling pretty confident between the earnings date and the preclinical data that we're still waiting on. If we get some good announcements on earnings, I think we'll see 250 at the very least. Short interest is still pretty high as well. See if I can refresh this and get the latest. Utilization is 92%. It's not bad. I usually like to see 95, but it's been bouncing off of 100 over and over and over again over the past several weeks. So it's close enough for me. About 23 million on loan. About 17% of the free float. Not much else to see here. I'm just kind of looking through the security lending volume to see if there's any major deviations or anything like that. So far, it looks like no. Nothing huge since it hit its all-time or latest highs. Shorts kind of hammered it. So that's about it for Progenity. Does anybody else have any other tickers that they wanted to ask about?
Do you mind if I add a few comments onto Progenity?
Yeah, go for it, man.
So I'm looking at here, and maybe I'll share my screen. I don't know if.
Yeah, we
this'll
can go
help.
ahead and hand it over to you.
So I'm going to point out one thing that I like and one thing that I don't like about Progenity. Try to stay neutral as possible on this. But what I'm seeing here is below the red line, your ATR, your 14-day ATR, and above you have the Donchian channels, which is going to be set to your 20-day low and high. So the upper band of this channel is going to represent your 20-day high, and the lower band is going to be the 20-day low. The middle, right here between the gray and the blue, is going to be the median or the average in between the two. The last time the ATR got bottomed out, which is right here, it preceded this big run up. When you got this break above the median of that Donchian band, it preceded that trend and continued up to this swing high up here. Since then, it's come down and it's pretty much bottomed out to about the same ATR levels. And it has broken above this median of this Donchian band. And you can see here it continues to set these higher parts of the band, which means it's going back and setting those 20-day high at a higher and higher rate, and the low has flattened out and just kind of neutralized itself. The one thing that I don't like is that it's trading above the 50, but the 50 is trading below the 200-day SMA. But here, it didn't really matter. It was the 50 SMA was trading below the 200-day SMA, and it still was able to run. So just kind of wanted to point that out. I do like that it is breaking above to this upper band of the Donchian on the daily, though, leading up into earnings, because earnings seem to have treated Progenity well last time. It looks like you had a little bit of a high. It came down and respected that 200-day SMA on the daily chart, and then earnings took it up to this recent swing high up here at $6.20. So.
Thanks, Markham.
Mm-hmm.
So I
Thanks,
guess.
Akam.
Oh, sorry. Does somebody have some?
Yeah, I just want to thank Akam for this analysis. Yeah, thanks.
You're welcome.
All right. So there was another. Let me go ahead and switch back to my stream real quick. Okay. So the other thing to talk about that I figured would be a good conversation piece is the overall market. So I've been watching the SPY, and I've been watching the I've been getting nervous about what the market is doing. There's a lot of people that are in denial, I feel, about the euphoria of the SPY and the market overall. Just that the Fed is going to achieve a quote soft landing, and I'm looking at all of the numbers for. I've been paying attention to the number of foreclosures and defaults, and these are kind of like the pre-tremors of a market crash. Is when the housing market back in 2006, when all of the consequences started to present themselves from all of the banks that were lending out loans that people had no business getting into. the default rates started to really elevate past like 5%. And right now, a lot of people are defaulting at such a rate that they haven't been able to accurately track the data. I'm kind of wondering if TradingView has some of Fred's data on here actually, but
Does
what I'm getting at basically is that everybody that's talking about the housing market being rock solid, that prices and the medium home sales price is going to continue rising and things like that, it's all bullshit. Let's see. I was looking for the margin equities and the margin debt.
If you go into the economy tab, you will filter exclusively for Fred and the economics.
Okay. Thanks, Verde. Okay. Let's start with inflation, just for starters. Okay. We haven't seen this high of a rate of inflation rise since the late 70s, right? As we were coming out of Vietnam, this is the worst inflation rise that the United States had ever experienced since well, basically the Great Depression and World War II, two of the biggest cataclysmic events for the U.S. economy at the time. And now we're getting ready to outpace both of those rates. And this has me nervous because we haven't even really begun to experience the real shortages that this is going to cause. Because right now, all of the shortages that we're experiencing are related to things like semiconductor shortages and oil shortages. But the real consequences come after those shortages have fully manifested themselves and we run out of those resources. What I mean by that is when we run out of semiconductors, we're going to stop being able to produce high-end vehicles and technology. When we run out of fuel, we're going to stop being able to produce energy. And those things combined are what our entire world's economy rely on, and our whole nation relies on this inherently. And without that technology, we're not going to be able to pursue things like green energy, and EV is going to become increasingly expensive to produce. It may even be prohibitively expensive for the companies themselves to continue producing in the short term. And there's going to be hoarding of semiconductor materials. Like you saw the squeeze with nickel. That's just one example. Silicone or silicon, gold, titanium, platinum, cadmium, all kinds of base materials that you need for creating batteries, and lithium as well. The materials that you need for creating batteries, chips, and conductive materials and printed circuit boards and things like that is going to become so prohibitively expensive that a lot of the businesses that have been relying on those cheap goods and the cheap access to those materials in order to do business are not going to be able to sustain their operations. And big companies like Tesla might be able to survive because they're able to leverage their extreme sums of wealth to acquire a source of raw materials directly. But all the smaller organizations and all of the companies that have been starting to falter are not going to have access to all of that. And what that will eventually lead to is a cascade of problems. So the things that I worry about is that the technology sector is going to start to suffer, tech manufacturing is going to start to suffer, the job shortages will become bigger and bigger and bigger, but also the job availability is going to get smaller and smaller and smaller. We're already in this late stage of of skilled labor shortage because there's just not enough educated people to fill the jobs that are necessary with the right background, the right education, and the right familiarity with this technology to continue producing these materials and this technology. And that will eventually cascade into other sectors. So thinking distribution, logistics, just getting things from point A to point B. And this affects everything. Like in America especially, almost all of our shipping occurs by rail and truck, especially to the Midwest, which is the breadbasket of the United States. So problems with like getting food to all the other ends of the country before it rots in the trailers. Things like that will start to become problems. And I know that I sound like really doomsday-ish when I talk like this, but this is kind of this is kind of like my worst fears, I feel, are being realized at the moment with with the consequences of how Wall Street has continuously built up this whole system around like the most efficient acquisition, the most efficient process for acquiring vast sums of money while completely forgetting the human element. And the consequence to that is that eventually people will stop working, stop being able to work, stop being able to afford to work, and then that's when we quite literally send ourselves over the edge of the cliff. So I'm curious what other people's thoughts are, if they think that I'm talking out of my ass, and please feel free to do so. I'd rather be wrong about this, to be honest with you, but there's so many things happening at the moment that has got me a little bit, I'm a little bit freaked out.
And to add to that, just another additional point, TD. No previous crash in history has so much retail been invested in the market directly. It has always impacted retail indirectly. This is the first time, I would think, at least, unless I'm mistaken, where there's incredible amount of investments, small investments that a huge number of people have done globally. This has become a global phenomenon ever since GME happened. I know people in other countries that I work with, even in what you would call tier 2 countries or developing countries, where a lot of people have started investing in the market because of the hype that GME and AMC generated. And so if there is even a wobble, forget a crash, even if there's a wobble, the amount of panic that will create will be far more significant this time than in the past, because people will get directly impacted for the first time. And I don't know how the market will react to that. I don't think anybody does.
That's true. It's one of the things that I worry about most, is that since so many retailers have gotten out of work and moved into the market and are continuously adding their capital, what little we contribute individually amounts to collectively 40% of the economy. Like if everybody liquidated every asset that we had and retail just poured all of that money into the U.S. stock market, it would account for about 40% of the wealth of it. And, retail collectively might be contributing like 10, 15% at the moment, but like that's enough to create swings. And since we're a lot more emotional than the algorithmic traders, I am wondering how that is going to affect everything else. See, there was something else that I was going to look for. I can't find the margin debt chart, but I was looking for the mortgage default rate. There's been a rising default rate, and I had those figures at some point.
Edie, this is Grilled Rockfish, and I'm in the mortgage business. I've been in it for 26 years, and I'm curious on your default ratio. I happen to live in an area that I've been fortunate because I live in the Maryland region, and this area is full of government workers and do a lot of VA loans and those kind of things, but I'm not seeing that default rate yet. So I'm wondering, is it more of a region?
So it probably is because I'm in the Pacific Northwest, so a lot of it may be localized right now. Um, there's an increasing homelessness problem that is occurring all across the entire West Coast at the moment. That's really exacerbated it, um, especially in Oregon and Southern California. So maybe it is partially a regional thing, but the other part of it that I was looking at is the foreclosures, right? So
Hmm.
one of the main issues that has gone on with the pandemic is that foreclosures stopped, right? And it's being reported as though the foreclosures just aren't a thing. And that's a fallacy because the foreclosures, while they have halted, is an artificial it's artificial because the foreclosure process uh, for these individuals that were at risk for defaulting on their homes,
Hmm.
they are still in the same situation that they were in before. It's just they've been given a stay of execution, if you will, because the
Right.
government mandated it. And let me see if I
That's
can pull this
that's. I
up.
think that was lifted though, right? So
Right.
is that your theory that a lot of these are just going to start, hitting hard quick?
That's part of the theory, yeah. So the main thing that has got me concerned is that before the pandemic, the foreclosures were already on the rise. Let me see if I can find this chart. It's got to be on Fred somewhere. There's Statistica. I need the Fred database though. Let's see, Federal Reserve. Come on. Okay, so there's the delinquency rate, housing supply, and foreclosures. And go switch over to my Firefox really quick. Okay. So this is what the delinquency rate was going into 2005, 2006, right? It's at
Hmm.
2.1. And this was on the rise, but it was artificially stopped at the time because of bailouts, but it didn't really slow down. The delinquency rate kept rising as the equity fell out on homes and refinancing became less and less and less of an option for people, and the foreclosures started to really kick in, and that's when it went out of control. So that's why the real crash in housing was so delayed. The stock market ended up feeling it. The housing crash was fully in swing by late 2007, but the market didn't feel the real brunt of it until the summer of 2008, and it peaked in 2009. But the defaults in the mortgages and the foreclosures kept going on into 2009 and even into 2010. And the reason for that is because the foreclosure process takes such a long time to go to completion. And in the meanwhile, the banks are hemorrhaging money because they're sitting on this asset that they can't enforce payments on and they can't collect from anything. And the process takes such a long time for them to even get the foreclosure closed before they can even begin talking about evicting people. So, what I noticed is that the delinquencies were already on the rise going into 2020, and then all of a sudden it just stopped. Like Q3 2020 is when they put in all the moratoriums, okay, and then
Right.
all the delinquency just fell off a cliff. What that has done is it stopped people from needing to pay. okay? But let's think about the mentality of the average American and the debt culture that we've created in our society. Everybody thinks that they can just put it on a credit card, and that's what we're like programmed to do, essentially. We have programmed ourselves to just throw money on a credit card, take what we can get, and especially people that are in bad financial situations or are not good with money to begin with, they will continuously put off the paying off of debt. I find it very unlikely, and I'm not saying that everybody would do this, but I find it unlikely that that most people would prioritize paying off the mortgage with that zero interest um, opportunity that they've been presented with, even though the pandemic afforded them that opportunity. And some people may not have been in that position anyway because they lost their jobs. And there's been companies that have been trying to take advantage of the I forget what it was called, but it was essentially like as long as you could prove that you were trying to hire people, but you couldn't find anybody, then you were entitled to the interest-free loan, basically, where the government would pay out the small businesses in order to keep them running. That continued, and what we found out, if we look back at like all of the different companies that were taking advantage of this loan, they were all saying that they were trying to hire, but then they would never actually hire someone because they would just say, well, we can't find anybody qualified. But that was just a facade in order to keep them eligible for that loan program. And they kept sucking up that money. And eventually, all of these moratoriums are going to come to an end. So you combine that with the fact that landlords the whole time were getting shafted because they couldn't collect debts from their tenants and they didn't have a loan program to keep them afloat. So most of them just sold out of their property, and now they just have they've just taken the risk off their hands. They've sold most of their properties, and land ownership is turning over to banks and hedge funds now. Like you have all these low density apartments, high density apartments, and single family homes that were held by landowners that have just sold entirely off to big corporations because they couldn't sustain themselves taking that huge loss every single month because they weren't collecting rent. And now you've got a rent crisis that's brewing because even my rent went up like a full 11%. And everybody else that's living in the West Coast where there's already this ongoing problem of rapid accumulation of debt because people stopped working, they stopped having opportunities to work and find jobs because the moratorium was basically putting businesses into this like completely off-risk, no hiring freeze thing for all this time. And meanwhile, people's bills kept stacking up, and let's be honest with ourselves, like the entire check that was signed off and sent to Americans, most of those didn't even put a dent in their credit. So I'm putting all of this together to basically illustrate that we now have a nuclear bomb sitting here in the center of the country called the foreclosure. There's this. I need to find the rest of it. It's funny. My wife was the one that was collecting most of the data, and she hasn't handed me everything that she had pulled together, but she has all the charts and a huge write up on all of it. No, that's not it. Well, anyway, the point that I was getting at is that the foreclosure processes are now opened up so that the banks can start actually pursuing them now, but they are going to take a long time. And one of the big problems is that the foreclosures have to be handled partially by the courts, which are now going to be massively backed up And in the meanwhile, all these banks that are holding on to these bad mortgages, which is the same situation as in 2008, except it was it was the cause of their own fault, just accumulating a bunch of bad mortgages because of terrible lending practices. But now the situation, which isn't all that different, is that you have all of these banks that are holding on to massively high risk mortgages because there's a bunch of people that have been delinquent on their debt for more than a year, and they have not been able to do anything about it because the employment opportunities weren't there. There was no way to pay down the debt, and the banks just had to keep eating it because that was the mandate by the government in order to keep things afloat. And they accepted that risk, and they kept accumulating all of these loans, Wells Fargo being one of the biggest ones. And now what I'm speculating is about to happen is that all those foreclosures are going to start to get pushed, and no two states are the same. Most of the states have very different foreclosure processes that go to various lengths. Like Texas is actually Michigan is the shortest one to it's like 30 days to foreclosure, but Hawaii can be as high as 1,200 days. It can literally take years. Anyway, I guess the point that I was getting at is that the spy is going to react to what's going on in the overall market, but what I fear is going to start to occur is that between the energy crisis, the semiconductor crisis, and eventually the housing crisis, there's going to be a massive shift of taking things out of these speculative assets in the stock market into hard assets as the value of all these things just craters. And I'm kind of thinking that we're starting to see the start of it.
Yeah, and it's crazy how many businesses are related just to the housing industry alone, and then you throw in all the other issues. Yeah, I see what you're saying now.
Yeah. There's just been all of these delays on everything, and everyone's saying like, "Oh, globalization is over," and now the Fed is going to achieve a soft landing, and they're going to limit the rate of inflation and all this. And it's like that doesn't really matter because at least 50% of Americans are now in a position where they're going to start to struggle to pay everything. And how do you choose between paying your mortgage and paying to feed your family? Like that's a basic survival decision. And what happens? I was just going to say, what happens when the option to buy food starts to get taken away, not because you don't have enough money, but because there's so little availability, because there's not enough fuel in trucks to carry the food to the grocery stores, and there's not enough energy to keep the lights on and the refrigerators running. That's the kind of crisis that I'm talking about being ready for.
And to plant a garden.
Yeah. Yeah, I kind of agree with you there. But yeah, my fear is that this thing is going to be so widespread, and most people, like, that's not going to be an option. So then what do you do? What do you do when there's no food in the grocery stores and you couldn't afford to, buy dirt and seeds to put together a garden, or just didn't have the foresight? Because most people won't have that foresight. Most people won't even have those opportunities because everybody's clustered up in the cities.
Right.
Those options don't really exist for at least 50% of the people, and you're talking about over 120 million people.
That will cause unrest.
Yeah.
True Demon, by the way, I've been talking with some of the professional members that were confused on the timing thing as well. And so I have a list started that I pinned in the professionals floor chat channel for you of tickers that people want to have looked into that maybe aren't here right now or can't make it right now.
Okay.
And I'll just keep updating the pinned one
Okay.
that I made.
Let me see. Okay, ALZN, AMC, HYMC, GME, and TOMZ. TOMZ is a new one. Okay, so ALZN. Let me go ahead and switch over to this one. I apologize in advance. I'm probably not going to be able to stay for the full 2 hours today, guys. Went and put myself into a really bad timing issue. Okay, so ALZM. Let's see.
You're on the mortgage.
Oh, my bad. There we go. Okay, so
Still on the mortgage.
still on. Oh, I gotta switch it over on both my recording and my Discord. Sorry.
Sorry.
Oh no, you're good. Okay.
There we go.
All right. So ALZN is it looks like it found support at $1.20, so that's pretty good. The I really have no speculative. I don't really have a basis for my speculation, I should say. ALZN is just one that I happened to see was exhibiting a lot of volatility, and I saw this huge volume candle come into it after I'd already entered into my position, so it's kind of just confirmation of my conviction. But my whole reason for getting into it was because, one, I saw that there were these Todd-Vergence mirrors on ScourgeBot. The earnings were good. The the ticker is held by Alt Global Holdings, which is Todd Milton Alt. The guy started pumping it on this day that it had a big spike, and now it's finding support. So I'm guessing that he's going to, like, this is literally my thought process, is that this guy's going to hire a bunch of pumpers to go ahead and pump the stock and talk about it and throw it out on their YouTube channels and constantly be hyping it. So my whole investment thesis is like, hey, get in early before the pumpers start talking about this thing, because once they start letting it rip, there's going to be a bunch of people FOMOing into it that don't know any better, and they're going to be left holding the bag. And I'm sorry that I'm playing it like that, but I don't know what else to do, because the only way that this guy gets caught is somebody just has to look into it deep enough at the SEC, and like, we already know they're not going to do that. They're just not going to keep up. Okay, AMC. AMC I'm pretty excited about. So this one I see the big curl on the OBV. This was my big signal. So AMC, I went and took a small position in. It's literally a 20 to 30 spread. So if AMC breaks out of this falling wedge, that's the big signal, but I'm expecting it to hit some resistance here at the $30 mark. I still have a base of shares, which are now currently at a loss because of averaging up so much, but oh well, what can you do? The way that I'm going to be playing this is, and I do expect AMC to break through this resistance at 22, at which point I think it'll be a pretty clean run to $30 between now and mid-April. What I anticipate is that the April monthlies are, when we start to hit that $30 price point, either we manage to break above, or they'll try to inflict max pain in order to get those options to expire out of the money. Let's see. You guys can track the conversation in professionals floor, I'm going to throw some inspects from ScourgeBot down there. Okay, we'll get the live options there. The AMC's got a 64% lean towards the calls. It's very nice. The biggest calls right now in terms of volume is the $21 strike for March 25th. Oh, so that was last Friday. And those expired out of the money. As did the as did the $20 puts. I guess they were slightly in the money. Yeah, all the volume that was traded on AMC was on the last Friday expiration. That's interesting. Anyway, I wasn't watching AMC as closely as I probably should have been between the unusual whales flow and things like that. Last week was pretty hectic for me, but anyway, my the way that I'm playing AMC right now is I'm going to look for the OBV to break above these levels. Okay, the resistance I expect to see will be at $30, and once we sit at that resistance for a little while, then I will go ahead and take a much bigger position in some deep out the money calls expiring a couple of months away. My thesis for this is that AMC is preparing to squeeze again, and I don't know if it'll be the MOAS or whatever, but I do agree with the thesis that there is a ton of naked shorts on this that are unreported and unknown. And if these entities that are about to go bankrupt end up suffering enough in the SPY, if the market crashes beneath them, that they have to start liquidating assets, then the naked shorts will come to light as a result of it. My main reason for believing that is that the DTCC is going to have to clean its books, and if AMC doesn't go under, then all of that over leveraging is going to have to be reported, and eventually the numbers will get so big that they're not going to be able to be concealed anymore. And the DTCC and the NSCC are going to have to call on liquidity requirements for all of the entities that were involved in it. So things that I'm looking for in terms of the technicals is the resistance at 30 cents. Or $30. I'm talking about cents for. Okay. So if AMC gets this big breakout, then the OBV breaks above these resistance lines that I'm looking at here. I expect it to run into some resistance right about the time the OBV is reaching this level. And then, after it's spent a little bit of time here, maybe a week or two, I'll go ahead and start a position for something much further out the money.
Will you be setting any trading view alerts for this?
Yes, I've already got one here for the $30 area. If we get the breakout above 220, which I think is pretty likely to happen in the next couple of weeks, I'll go ahead and set an alert for you guys for that one too. so you guys can track the trading view channel and get alerted whenever that starts to happen. There's already alerts for these wedge breaks, so if we start to break above these levels, then you'll be the first ones to know. I don't know. If we start to squeeze here very soon, then I'd say that my timeline was pretty close enough to accurate to be considered accurate, wouldn't you guys say?
Totally agreed.
What was that?
I totally agree. It's
I appreciate it. It's a couple of weeks off, about 2 trading weeks off. That's pretty close, though.
Mr. Boulet's not here, so I'll say it. Hell yeah!
We moving, Jack.
We moving, Jack. I love Mr. Boulet. I need Mr. Boulet to be like my cheerleader in my office during a hard day.
While we're on the subject of AMC, did you talk to Astro at all about that new indicator that he made and what exactly he's getting at?
No, I didn't. And I'm not sure what he's basing all those figures off of, so I might try to talk to him about it, but I'm kind of limited on time this week. I know it's really bad timing given everything that's happening in the market, but work is not letting up at all right now. What were you saying, Dilly?
Oh, I was just going to say that I messaged him in the ticket that we have with him about it. So
okay, well,
yeah,
I will
he'll respond there for all of us.
To answer the question for you there, Dilly, to add the ticker or to add it to your chart. I did it earlier, but I can't find it right now. But I just searched for the indicator Sword. What the? He added it on his Twitter. It was Sword something. I'm pretty sure.
Okay.
I will check it up. He has it pinned in his Twitter. Script is no longer available, so he probably removed it. It's one of the 1,000 truths.
Yeah, he was having it up, I guess, for I think 2 days or something to try for people to try it out. But
it's not accessible anymore. I found it earlier today, like 5 hours ago or something. But now it's not out there, so he probably removed it already.
Okay. So I'll keep on plugging away on these tickers here because I'm about to run out of time. Highcroft Mining. I know everybody's looking at this one for a squeeze. What's the short interest at right now? Let's see, HYMC. I'm just gonna look off on my Vortex chart. I'm not gonna switch screens because I'm only checking it for like 3 seconds. See, shares on loan is 8.36 million. Estimated short interest percentage of the free float is currently at 45.9%, so almost half of the stock being shorted. That is not insignificant. I think I'll also take a look at the live options and the short squeeze indicator. Big money on the 250 strike for April's. So the April monthlies 250 strike is the big one.
Like was pointed out to me on Saturday, I think the float has gotten a lot bigger and we haven't gotten updated numbers. Just put up a post to my best guess as to what the float actually is and how that interprets into the current short interest percentage.
Gotcha. let's see. If I were to, if I was to pick one, if I was to pick any particular strike, if I were to play options on this one, I would be going for those $1. I would actually go in the money for this one. Because right now the OTM calls are already pretty over leveraged. And there's 15% of the float ready to go in the money if it goes to a $250 strike. So if I was to play this one and I were to play the Aprils, I would be playing for $1 calls. If I were to go further out the money, then I would probably be playing 250s for, honestly, August. Because if the volatility starts picking up on this thing, those are going to be the easiest ones to make profit on. You could go further out the money for like $4, but you'll lose a lot in theta. You want to stay close to the current share price and give yourself a good chance that it goes in the money so that theta won't eat it up. You want to make sure that you're giving yourself a good chance for it to go in the money so you get that immediate intrinsic value. And if this thing will squeeze, I don't know when it will be, but I can tell that the volatility is going to start to rise on this one because of all the speculation with Adam Aaron and all of that. So, I'd be looking for a breakout. Just a psychological level of 160. Once it breaks out above the psychological of 150, you'll get like the shorting just from market makers to try and inflict max pain. OBV is already starting to plateau. So I don't know what earnings is going to look like. I'm not guessing. I'm guessing it's probably going to. I don't know if earnings includes. Occams, you might know this. Does earnings include proceeds from share sales? Do they include that in their EPS and revenue?
I'm sorry, say that again. Do the proceeds from the share sales included in the EPS?
Yeah, in the EPS and the revenue.
The answer is going to, the gap reporting says yes, I believe. If you look at the gap, there should be a line for, specifically for that in the gap report. Maybe it doesn't break it out in TradingView. But that's where it should be reflected in their, it should be on their income statement. Here, let me.
Interesting. Okay. Well, gold mining is one of those, it's just one of those businesses where you have to spend a large fortune to make a small fortune. The EBITDA is rising at a pretty steady pace, though, so I'm happy with that. There's enough fundamental reasons on their balance sheet and their income statements to actually be positive. Let's see what their cash flow looks like. Maybe they have it in the cash flow. Cash from investing activities, purchase and sale net. Okay. Well, we can at least get it here on the cash flow statement, dude.
Okay, you did. So it's on the cash flow.
Yeah, it's on the cash flow statement. Sale of fixed assets, businesses, and purchases and acquisitions of business, as well as capital expenditures, and then the purchase and sale of net maturities and investments. So this will include their shares sales.
But there's not a specific line for it.
Oh, there's this one here: issuance of retirement / retirement of stock net activity.
There you go.
Yeah.
Sale of common and preferred stock. Yeah. Okay.
Yep.
You found it.
Yep. So this will tell us what we need to know. That's enough. It's enough to let us know what's going on. So this will give them. I'm assuming that this latest sale will be included in the next earnings report, not this one, but the report should at least look better for them on this particular earnings. But I'm kind of thinking that the real earnings report, what will make the diff for this particular company, is everything that happened in this past month. So whatever happened the last quarter, to me, not really necessarily relevant, because they made their biggest share sale here during this big volatility wave. If we get their at the market offering proceeds report whenever they release that, then hopefully that'll look good, and we can just go ahead and append it to the balance sheet and estimate what their finances will look like for the next quarter. Okay. Heisenberg. Am I waiting for the OBV to buy more options on AMC? I've already got some options in AMC, but it's a vertical call spread because I'm expecting it to hit resistance at $30, and I'll make my max profit if it goes to that. And then the plan will be to wait for the resistance to hit it, and then I'll purchase more options. But by that time, if it breaks out to $30, then I do expect the OBV to have broken through all of those levels and hit the 5.5 billion mark. That's what I'm looking for, is 5 billion and 5.5 billion on balance volume. Okay. Well, in any case, HYMC, I'm if there is going to be a big move, it's just going to be from FOMO. So, but I wouldn't count on that happening right away. I would wait. I would either give yourself a lot of time with options or start buying shares while the price is low and just expect to hold that for a while until the volatility really starts to pick it up, and then market makers start feeling some pain. That's how I would be playing HYMC. I'm not currently holding any positions, though. Okay, let's see what the other one was. There was...
Can you add NIO to the list? NIO?
NIO. Oh, yeah, NEO. Yeah, we can take a look at that. So, funny thing about NEO, this was actually pointed out to me by Cap Morris, but he mentioned that none other than Kathy Woods divested about $147 million out of Tesla and put it into NEO, and that was announced over this weekend. So we were talking about it and speculating that maybe that is what the whale was betting on, and that's why they took that huge position in NEO, was the news that Kathy Woods was going to put a bunch of cash, and that he knew that the whale knew about it. So they also put big bets on NEO. But then I was thinking, like, well, what if Kathy Woods is the whale? And what if she's the one who had that huge, unusual whales print?
That's a really good point. How much do you know how much she? Because she got out of Tesla, right, last year at some point.
Yeah, I think so. It was a long time ago, so my memory's a little bit fuzzy on that one.
Yeah, I'm wondering how much she invested into Neo compared to how much she was invested into Tesla,
Yeah,
and if some of that accumulation is going to come through options.
yeah, maybe
Because
so.
the options were pretty. They were only a couple months out. They weren't leaps, right?
Right.
Okay, well then never mind. I was going to say if they were leaps and they were at the money, then that might be a sign of accumulation down the road. But that's a different story.
Well, she didn't totally get out of her Tesla position. I just know that she divested 147 million, which for her it's a sizable chunk. But to put that all into a speculative newcomer EV play like Neo, that's a huge bet. So
they're one of the few EV companies that has shown that they can make production and roll vehicles out. And I think because they missed on that one item. I think that's why that reaction to the earnings was the way it was because they, out of all the companies, were kind of expected to. They've already seen a production rate, and people kind of wanted them to keep up with that. And I don't think they did in the investors' eyes. And even though everything else looked good, that was the one ticket that they could sell on.
Mm-hmm. Yep. All right, I'm going to quickly blow through these tickers because I've only got 5 more minutes, guys. So GME, all I can say, it's stair-stepping pattern. Repeated bull flags. Here's the first one. Here's another one. Broke down. Got a second bull flag out of here. Now it looks like an inverse head and shoulders. I'm looking for a breakout above 160 up to resistance at 180. If it hits 180, expect it to kind of either get rejected or consolidate at that level. If you see it get rejected, then I would be day trading that position. If you see consolidation, I would be doubling down because the OBV is already crossed. GameStop's already shown that it's getting ready to make its next move up. It's kind of hard to see, but I'm looking for the OBV to cross 1.52 billion. So if you see this thing screaming towards 180, then expect the OBV to cross 1.52 billion. TOMZ. This one I don't know anything about, so let's go ahead and take a look at this one on the daily chart. Okay, it's interesting. It's interesting. I don't know anything about this company. Oh wow. Okay, I see what the big deal was. So a big buy happened at $1.15, and it went moving. Okay. So that's a significant area. Big volume happens here. I'll say at $1.10. Whoops. We see big accumulation here, and then a sell-off at $2.15. Barely broke the 100 EMA. Okay. All right. So, TOMZ has no options. Shares shorted is 56.7 thousand. I don't see anything in this that tells me that it's going to squeeze. The only thing that I see here is that it behaves with a lot of volatility at really random time intervals. Like this, I don't know what the hell this was all about. Only thing here that I see is that there's major areas of supply and demand. So if it breaks out of this level at 110, expect volatility. That's the only thing that I can really say about it. That's the only thing that I see here. This looks to me like buku accumulation and then a big sell-off that started right around here back in July of 2020, and it's just sold off ever since then. Yep. Big demand above $1. Okay. Well, that's the that's the only technical analysis I really have for this one. It looks like it's getting it looks like it's hitting its base of support, and if it is going to move, it would probably be here above $1. That's the only thing that I see here. And then the last one I have time for is Cleveland Cliffs. This one is just steel shortage. There's a lot of speculation on steel shortage and construction materials. So Cleveland Cliffs is a big provider. They're based out of Cleveland, Ohio. I happen to know that steel and coal is huge in Cleveland. They're one of the biggest, cheapest producers in the United States. They've got a huge, they're a huge supplier for the entire nation, and they've been getting more and more business, and their demand for their steel is through the roof. This is valid. This is a valid play. But I don't know what it's going to look like here. I mean, it's moving fast. But, like, you're almost at resistance right now. Like, you're right there. Very close to resistance. I would say be very careful, but I do know that steel and the production and shipping of steel through the Great Lakes is a huge industry there, and yeah, all I can say is good luck. I'm not going to play it though. I wish I had played Cleveland Cliffs a long time ago, back when it was oversold here back in January, but. Yeah, that's about it.
For anyone following, I think Cleveland Cliffs acquired a nationwide scrap metal recycling name of some sort months back. I do vaguely remember that.
Interesting.
Ooh.
Okay.
Is that why you're in it, Heisenberg?
Sorry, I wasn't listening for that second.
Yeah. Are you in CLF because of them acquiring something? Todd just said it.
Just hype. So I don't have much money in it. Just
okay.
I'm riding a trend. That's all.
Okay.
They acquired a recycling company or something a while back.
Told steel is squeezing, and this one's doing good. So I'm riding it with them.
That's fair. That's fair. I would just be careful, because you're almost at resistance. But yeah, Cleveland Cliffs is absolutely running, and steel shortages are going to be a a recurring problem going into next year.
Yeah, that's true.
BBIG is doing the same thing with consolidating. I'd expect it to start making its next leg up. So if you want to try to make a day trade or something for like $3 strike calls or something like that, you could go for it. But I'm expecting it to bounce around in here. Mullen, I think it's going to start to turn around here and complete an inverse head and shoulders pattern. I'm thinking it bounces off of this support because you see this volume candle here. The volume shelf here shows there's a lot of supply, or excuse me, there's a lot of demand in this area. So I'm expecting a bounce here at 230. I should expect to see some more of it. We'll see what happens. And that's about all I got time for today, guys. I'm sorry that this one was so short and it was like so poorly timed. I'll try to do better next time. All right. Y'all have a good night. Go ahead and let me know if there's any other tickers that you want me to take a look at going into tomorrow. I'll come back and take a look at the list.
Okay, that works.
All right.
Cool.
Thank you.
Thanks,
Have a
guys.
good
You
night.
all have a good night and good luck in the morning.